Alright guys, so the US trade war just got worse. Now we have said it at least 100 times by now. Countries in the world do not like to get bullied and they will be pushed back. We must re-emphasize a trade deficit is not some grand conspiracy out there to get the US economy. It simply means consumers and companies, they recognize value so they import more stuff into the country. But the rhetoric has not changed at all.
They allowed our beautiful USA to be laughed at, scorned, and taken advantage of by everybody. We were ripped off on trade by nations all over the world, both friend and foe, and oftentimes a friend was far worse on trade than the foe. But those days are over. You're at the start of something very, very big. You're going to see that very soon now.
And now we have a US ally pushing back on the United States. The Japanese team has been heading back and forth to Washington to lobby down the tariffs. However, there's been no progress at all. There's simply no clear direction. Not only that, the US wants Japan to stop managing their currency. Oh yes, there's also the issue about joining Bessent's plan to contain China as well, to block Chinese exports from the Japanese market. But that will invite retaliation from Beijing. Just their chipmaker revenue from China alone is enormous. Last year, Japanese companies sold 2.2 trillion yen worth of machines to China, and that's almost 50% of their total revenue. Now, China cutting off these sales is one thing, but if Japan doesn't have the leverage to push back, we can expect Bessent to keep trying his luck and order Japan to preemptively cut chipmaker sales to Beijing. And we should be under no illusions here. Trump will keep pushing and lowballing Japan with a lousy deal. The US realizes they can't contain China alone, so they will need to form a coalition to even stand a chance. And that will most definitely cripple Japan's chip industry, especially at a time when the US wants to reshore production back home. And if Japan cuts away Chinese revenue, they will easily lag behind the Americans over the next 5 to 10 years. But domestically, Japan is also facing an economic crisis. The Bank of Japan was supposed to be raising interest rates at a time when the rest of the world is lowering theirs. They have no choice because their inflation is the highest of the entire G7. US inflation is at 2.5%, while Japan is way higher at 3.2%. But they simply can't hike rates to contain it now. And this is all thanks to Trump's trade war and the level of uncertainty. If the tariffs destroy Japanese exports, hiking rates might crush their industries further. So what Japan needs is clarity. They simply need to know what US trade policy has in store for them. They need a clear direction of what's next. And that's why Japan just gave the US a warning. They are aiming for a deal in June that avoids punishing China and strengthening their currency to save the dollar. Japan's finance minister Kato just reminded Bessent that their holdings of US bonds could always get weaponized. In other words, Japan could start dumping their massive reserves of US debt to mess up the treasury market. He mentioned how their treasury holdings is a card that can be used. Japan is well aware of that financial nuclear button. In addition to that, Kato said that Japan doesn't hold US debt to specifically support the US. And if there's no advantage to holding US debt, especially if trade with the United States drop, we could simply sell them off in the open market. That's the implicit threat. Well, if Trump wants to be transactional, Japan is going to give him transactional. And in the latest update, Japan is still the largest foreign holder of US debt. That holdings is over $1.1 trillion worth of treasuries. That is an enormous amount and more than 30% than what China even holds. The common pushback is that Japan can't afford to sell their holdings of US debt, and if they do, the bond value will collapse and there's nowhere else to park their money. It's the same argument Bessent just used trying to convince himself why China can't dump their bond holdings.
That if they started selling treasuries, they would they'd have an effect on the price. But more importantly, they accumulate dollars. And what are they going to do with the dollars? So if they sell treasuries, then they would have to buy RMB, and it would strengthen their currency. And they've been doing just the opposite. They've had a weak RMB or yuan, the policy, so it really serves no purpose for them to weaponize treasuries.
If you saw them trying to weaponize treasuries, how does the Treasury Secretary respond?
Look, we have a big toolkit. We do buybacks. The Federal Reserve, I think if treasuries hit a certain level, or if the Federal Reserve believed that foreign rival were weaponizing the U.S. government bond market or attempting to destabilize it for political gain, I am sure that we would do something in conjunction with each other.
But Bessent is highly mistaken here. He believes the only avenue to spend treasury proceeds is to buy back your own currency, the RMB for China and the yen for Japan. But there are many other avenues to spend the proceeds from the treasury sales. Japan could always buy euro bonds instead of buying back the yen. And this in fact could actually devalue the yen, allowing their exports to be even more competitive. Now the euro has outperformed the dollar by over 5%. This is good for Japanese capital flows because it won't really affect the yen directly. Furthermore, the EU debt markets, they're going to deepen. More bonds will be sold, so there will be sufficient debt for Japan to really invest in. In addition, holding more euros isn't a bad idea. Japan will need to find new trading partners and Europe will become a good candidate to replace some of the US demand. So holding some euros instead of dollars will be good for bilateral trade. Now what Bessent has is a lack of imagination. Japan can absolutely get rid of their dollar holdings if they want to. They could use the bond sales to subsidize their own industries. And this would put the money into productive use and help their own companies become even more productive. After all, the big powers like the US and China, everyone is actively subsidizing their own industries. It's just how the modern economy works today. Japan already has a plan to provide 10 trillion yen worth of subsidies to their domestic chip industries, and this is equivalent to $65 billion worth. Tokyo can always do the same thing again. And the mechanism is quite simple. Japan can simply sell off their treasuries to receive dollars. That's step 1. Now step 2 is to convert the dollars to yen. And step 3 is where the magic happens. You get the Bank of Japan to issue a ton of JGB bonds to absorb any excess liquidity, any excess yen in the market. So now the Japanese government can spend their sterilized yen on domestic investments without worrying about the yen strengthening. It's quite straightforward and I'm very sure Bessent understands this. This is the problem with trying to reduce trade with the world. Suddenly, there's fewer need to hold US dollar assets. The US is now an industrial competitor and countries around the world, they will seek to subsidize their own industries. Now, Washington knows this, and that's why they need the world to desperately hold on to their holdings of US bonds. But what Trump is doing is making things impossible. He is forcing countries to choose. And despite what Trump would have us believe, the US is not just dependent on foreign imports, it's very much dependent on foreign money as well. According to Apollo, foreigners hold $19 trillion in US stocks, $7 trillion in treasuries, and $5 trillion in corporate debt. Focus on just the debt portion. Foreigners hold 30% of all outstanding debt, both government and private. Now imagine the devastation should countries decide to jump ship. And it doesn't matter how they spend the money. Maybe they use it to subsidize their industries. It really doesn't matter. The net effect is money leaving the US, which opens up a whole can of worms. Bessent forgot one simple fact about the hyper-financialized US economy. When you decide to reduce your trade deficit, it means the world earns fewer dollars. And when they decide not to recycle money back into the US, this is a problem. It creates what is known as a capital account deficit. Money could leave the US markets in droves, and that would crash the dollar and reduce bond values or spike rates higher. And that's exactly what happened just a few weeks ago. And because the US refuses to solve the trade war with China, global investors are very frustrated. Even Bessent himself doesn't know when the disaster will end.
There's a very good chance that the U.S. makes a deal with China. Do you see that happening within a couple of weeks, a couple of months? What's your timing, Mr. Secretary?
Well, again, Maria, as I said, the Chinese need to de-escalate these high tariffs because there is the equivalent of an embargo, and the Chinese business model is built on selling cheap goods to the U.S. They sell us about 5 times more than we sell them. So, their factories are closing down as we speak. We're going into the holiday season. Orders are placed for that now. So if those orders aren't placed, it could be devastating for the Chinese.
It's so frustrating. We are now back to strategic uncertainty. Bessent still believes Chinese industries will totally collapse. But here's the problem. The longer this drags on, the higher the odds of investors giving American assets the cold shoulder. And we aren't joking here. The economy is halfway into a recession, and lending money to the US is getting really risky. Everyone is afraid of a default. And now private US companies are in trouble. Corporate America is facing a funding squeeze. According to Goldman, investors outside the US are net sellers of US corporate debt in the first half of April, not buyers, they are now sellers. And what do you know? The selling came after Trump announced the reciprocal tariffs. Lending to US companies is now very unattractive because of the fundamentals breaking down. Input costs across the board will be heading up by at least 10%, and I'm being very generous here. Meanwhile, revenue will be crashing. The US consumer is tapped out, while foreigners won't be buying American products. It's another double whammy for foreign lenders. And make no mistake, selling now means money managers are likely taking on a loss. They are dumping because rates might continue to head up, or companies themselves might default. Lending to US companies used to be a very good deal, but Trump's trade policies just did a massive U-turn on the entire situation. And this also creates a very serious domino effect for corporate debt. Now, since January, even high-grade corporate bond spreads have flown to the moon thanks to the tariffs. Quality companies now have to borrow money at 100 basis points more than the US Treasury. So if Bessent borrows money at 5%, the best companies in the US will have to pay at least 6% or more to access capital. And lower tier companies will have to pay 9, 10, or even 11%. And with investors starting to leave, this threatens to spike the chart even higher in the months to come. Ironically, this increases the odds of a debt default. So we can see a convergence of storms coming together that makes dollar assets really risky. Even if companies get paid more than treasury bonds, the currency conversion could devastate their returns. It would be a horrible sight to behold. And once again, we are left with a sad realization that everything hinges on the tariff policy. Nothing really makes sense anymore, and I hope you don't think a settlement will come anytime soon.
So many things are happening, so many great things, and we won't let countries rip us off anymore. A lot of people like to talk about tariffs. Well, tariffs is exactly what they were doing for us. When you want to defend that, they're a beautiful thing for us if you can use them, if you can get away with using them. It's going to make us very rich. We'll be paying off debt. We'll be lowering your taxes very substantially because so much money will be taken in that we'll be able to lower your taxes even beyond the tax cut that you're going to be getting, hopefully, with the big, beautiful bill.
But let me highlight the risk of the tariff war dragging on. The longer this continues, the more frustrated foreign owners will get and the more bonds they will dump. Nearly 80% of all their debt holdings are long-term nominals, and these are 10 to 30-year bonds. And if these bonds get dumped, everything from mortgage loans to personal credit could explode even higher. But worst of all, future demand will get compromised. More treasury sales will get shifted to shorter-term notes, which will keep rates elevated. So I hope Trump really knows what he's doing, because the US bond market isn't out of the woods yet. Another demand shock could be coming very soon as we approach a recession, a very deadly combination. But let me know what you think. Will Japan really dump their bond holdings? And will global investors stop lending to US companies as well? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.